New information this week. In the United States, the unemployment rate stands at 7.9%. 157,000 jobs created in January. That's a modest improvement in the jobs picture. To put that in perspective, in the euro area, the unemployment rate is 11.7%, sitting stubbornly near a record high. When you look within the U.S. numbers, however, surprising strength in jobs growth in the end of last year. In November, 247,000 jobs created, a little fewer created than that in December, but still strong, and then 157,000 in the first part of this year. Within these numbers, some interesting areas. Construction, 28,000 net new jobs in construction, likely Superstorm Sandy cleanup, and also the housing market. The housing market is starting to come back, and that's creating some higher wage jobs in that area. Healthcare jobs, always a consistent performer, another 22,000 created there. Retail jobs, surprisingly held in. Some had thought there would be fewer retail jobs after the holidays, and because of the expiration of the payroll tax holiday, instead that held in there. Overall, when you look at these numbers, you have to put them in perspective of a Super Bowl week of economic news. So much data, and some of it, quite frankly, conflicting. Let me start with the strong information. Durable goods, stronger than expected. Home prices doing well for the first time in years. The Fed continuing to stimulate the economy, and private sector jobs growth holding in there even as the government is starting to lay off or continuing to lay off jobs. But GDP at the end of last year shrank unexpectedly. The American economy actually shrank at the end of last year. Jobless claims are picking up, and consumer confidence was weaker than expected in the beginning part of January. Even as stocks sit near record highs, certainly means it'll be a very interesting beginning to February. For CNN Money, I'm Christine Romans.